I guess there was a lot of anticipatory behavior because many people have learned about the halvings and what has happened historically after halvings. And I think they got a little impatient after the Bitcoin price did not rocket after the halving. So the reset, I think, is very healthy, and it was very interesting to.
Cathie Wood, founder, CEO, and CIO of Florida-based asset management firm ARK Invest, says that the world is about to go through some very interesting times because of the government's unstable monetary policies. In the most recent episode of her monthly show, Cathie talks about the Bitcoin herring M2 money supply and how important it is to be innovative as the world economy becomes less stable and more uncertain. Cathie and Yasin Alandri, director of digital assets at ARK Invest, compare Bitcoin's mathematically fixed MEAD supply to the unstable monetary policies of central banks around the world. Every time a herring event happens, Bitcoin's issuance rate is halved, which helps keep the cryptocurrency's inflation rate stable until the next herring year. Central banks. Monetary policies are very different. When they ease monetary policy, they increase the money supply so much that damage is almost impossible to fix, and when they tighten it, they do just as much, if not more damage. Cathie thinks that the U.S. Federal Reserve is acting in the same way right now. The central bank has promised to keep rates higher for longer until the fight against inflation is won. Cathie says this is a big mistake that will cause even more chaos in the markets and economy, like the crash of the early 2000s, the tech and telecom bubble, and the global financial crisis of 2008. ARK Invest CEO thinks we're on the verge of another major global financial crisis if we don't take action right away. Here are some clips from the movie where Cathie talks about Bitcoin's mathematically secure monetary policy, about how unstable the world's money system is, and how the cryptocurrency industry protects against this widespread instability. Please watch, like, and share this movie. Follow the channel and turn on post notifications.
Having in this purple line doesn't look anything like the volatility you see in monetary policy here in the United States and around the world. And of course, it's controlled by human beings. When we went off the gold exchange standard and closed the gold window in the United States in 1971, monetary policy just became unhinged, and it has been unhinged ever since, although human beings have tried to contain the inflationary ramifications, and they take it too far both ways. And right now, we think they're taking it too far on the downside. And I'll get into that as we go through some of the rest of the monetary indicators and the economic and market indicators. But Yasin, before I do that, maybe you'd like to add a few more.
Yeah, Cathie.
Bitcoin Monthly helps me understand the health of the system. I mean, the transparency of the network has given us a great opportunity to understand what's going on out there, and Yasin and his team are able to gauge where we are in the bull market based on some of the indicators and how they've behaved in the past. And before handing it back to you again, Yasin, I wanted to highlight one point. It is amazing to me that Chairman Powell and the Fed governors, as you mentioned, there are no Fed governors here in the Bitcoin ecosystem, but there are in the United States. And every time one of them speaks, markets move. And you know what? As I said, they overdo it one way, then they overdo it the other way. And it's just contributing to a lot of instability, not only in the markets, but also in the economy, I would submit. So back to you, Yasin, for last words on this section.
Cathie says that the Fed's decision to keep interest rates the same is adding more damage to countries that are already weak. At least 3 currencies have lost 40 to 60% of their value against the US dollar in the last year. The Egyptian pound has lost more than 2/3 of its value against the dollar in a series of staggered devaluations since early 2022, when the foreign currency shortage got worse. The situation is even worse with the Nigerian naira and the Argentine peso, which have both lost a lot of value in the past few months. Luckily, anyone with an internet connection in any of these countries can easily buy an insurance policy in the form of Bitcoin. This has helped millions of people in emerging countries avoid the steady devaluation of weak fiat currencies. Even developed economies are starting to show signs of trouble, and Cathie thinks things are going to get much worse.
Go through the drill. We've been through this month to month for a while now. And here you see M2 money supply growth versus CPI. You see money supply, the purple line there, is still negative, but not as negative as it was. That's interesting. You can also see that the CPI is kind of stuck in the 3 to 3.5% rate right now, or at a 3 to 3.5% rate. And what we think is going on right now is that companies are seeing their unit volume growth disappointing. And so they're trying to make it up with pricing. And in doing so, they're actually turning the consumer off more. It's not working. And I'll show you some indicators a little later on to that effect. So we think that they will be forced to take their inflation rates down if they want to invite the consumer back into buying products and services. So we think that this will resolve to the downside. It's been in a range now for, it looks like nearly a year in this 3 to 3.5% range. And if you look at the underlying economy, we're seeing the consumer starting to give way. We've seen it in different ways, housing related, auto related, but now we're talking about restaurants, which certainly have had a strong period as fiscal stimulus was burgeoning, but that's over now. And we do think the inflation rate is going to look a little bit like the money growth rate. We've been saying that we think it will turn negative at some point, and we still do. The biggest lagging indicator in the CPI is rent, and we're seeing signs of rental prices coming down. Actually negative in many parts of the United States. And so that alone will start pulling this down. We're seeing auto prices coming down as well as dealers try and move those units. Tesla's well advertised price cuts, maybe leading the charge, so to speak there. So we think that we do not think inflation is going to stay at this level. We think it is going to resolve to the downside in the next few months. And then here is the yield curve. We focus on this because it typically, when it's below zero, this line, it means that 10-year Treasury yields are below 2-year Treasury yields. And that is still the case. It's usually a harbinger of recession or much lower than expected prices. And I've focused us on this yield curve. If you look at 0809, where it peaked, it looks like it's been on a constant downtrend from a trend point of view in hindsight. And I do think that is saying something about the deflationary undercurrents in the global economy, and that they will continue to build. I know that everyone's focused on inflation.
Cathie thinks that we are in the middle of another technology revolution that could turn the current bad road of the global financial system into a better one. This is similar to how the internet took off in the 1990s. CEO, what comes next will be sped up by artificial intelligence. Other innovation tools like blockchain technology, robotics, and energy storage will grow faster as a result. They are going to change how the world's economy grows and changes. Cathie says that we should be able to avoid a big meltdown as long as our governments are willing to make a few changes that will help keep the world economy safe until these platforms are fully ready to go. Did Cathie make a good case for how we can get out of this without hurting the economy in the long run? Thank you for your comments and thoughts. If you want to see more movies like this, please subscribe to the channel and turn on post notifications. Thanks for seeing.